Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to talk a bit about how the lithium pegmatite explorers are suffering as summer begins, and we're going to talk about one positive development in the permitting sector, which should help one of our favorites.
Why is Patriot Battery Metals declining despite good results for the CV3 pegmatite?
Patriot Battery Metals has a world-class deposit at its Corvette project in the CV5 pegmatite, for which it reported a 109 million ton resource last year that attracted a major financing from Albemarle. This week they put out an update on drilling at the CV3 pegmatite, which is to the within that corridor southwest of CV5, and they now have identified the Vega zone as a higher grade, more hanging together zone within it that they're going to continue to delineate. They've predicted that they will have an updated resource estimate in the third quarter of this year for both CV5 and CV3. And last week, or a couple of weeks ago, they raised $75 million through a charity flow-through financing at $14.54, and yet today the stock has dropped 50 cents or so, is at $6.20, and who knows where it will be by the close. Now, why is this happening? Well, there's two things. One, the lithium carbonate price, which was sort of stuck around $6.75 a pound, has now started to decline again. It was $6.21 a pound yesterday, and now people are thinking it's going to drop maybe below $6, and the sort of lithium winter that we suffered from 2018 to 2020, it's going to assault us again. And Albemarle itself, it has plunged. It's down to $103 a share, and that is almost where it in late 2020, when it started breaking out from its lithium winter pricing. So the market's saying that we don't believe lithium demand is going to be very important down the road. And of course, we've had two major tariff events. The United States has basically put a ban on Chinese electric vehicles coming to the United States through 100% a tariff, and the Europeans, to protect their car industry, that at least the electric vehicle portion of it, have announced a 38% tariff. So this is going to stop China, which has surplus capacity for producing electric vehicles and is the biggest domestic consumer of electric vehicles. It's going to limit its ability to grow its sales of electric vehicles. And of course, in places like Europe and the United States, the masses who can't afford the high-end Teslas, they're not really happy with the current crop of electric vehicles offered by European and American car makers. The cheapness of the Chinese ones, they might embrace and live with the shortcomings, but with the higher price, that's not going to happen. Plus, there's this seeming inevitability that Trump will be president next year, will do everything he can to stop anything to do with the energy transition. Who knows, might even ban electric vehicles and further stymie the growth of this sector. So there's this pall hanging over the market that's causing everybody to say these lithium juniors, there's no particular reason to expect them to develop an uptrend in the short term. Maybe when we find out the outcome of the election and see where the direction of things will go. But also in Europe, we have this right-wing wave, and all of them, for some strange reason, are pro-fossil fuels, and they are in ascendancy. So again, the outlook for the energy transition and electric vehicles is glum for the moment, but that's just for the moment. We're also in the summer doldrums, and people are steering clear of lithium juniors and advanced companies like Patriot Battery Metals.
Has Brunswick figured out yet what it plans for this summer?
Well, on June 13th, they put out a pretty good update of what they are planning to do. And they're planning to do prospecting exploration on a lot of fronts up in Nunavik in the northern part of Quebec, in Greenland, also back in the James Bay region. This press release should have come out the same day that they put out their update on the Mirage. At the Mirage, they've indicated that they will do a lot of till sampling in the area around the boulder train, the 3-kilometer boulder train, whose micaceous nature is very different from what they have intersected in a bit to the northeast. And they finally admitted that hole 60, which was drilled on the Osisko Inlier claim, is an interesting hole that they will be following up. But it's too little too late. They do not have any understanding of market psychology. They mistime all their news releases. They cannot seem to read what the market wants when. So Brunswick itself continues to sink lower. It was about 24-25 cents today. They conceded that at Elrond, where they drilled 6 holes, what they encountered was sub-economic. So the Elrond project is a bust. They'll be going back into the Anaticow area where when I last talked to Killian Charles, he said that outcrop there is a little more interesting than we originally thought. So they're going to do some more prospecting there, and that might generate something. But the company's, for a company that's blowing $300,000 a month on overhead, it's very strange. You go to their website and you click on, say, the last news release, and it displays. And, of course, it's only in HTML. Professional companies include a link to the PDF that they have to file with CEDAR. A PDF, you can print all the graphics, show up nicely. Any web page, it's unpredictable what you print out happens. But in the sidebar, where it shows all the recent news releases, it's still showing only the 2023 news releases. And of course, the Mirage project page has not been updated. And I just do not understand how a company that has such a high profile, spends so much money a month on non-exploration, cannot have an updated website or anybody even paying attention. In fact, in their assay tables from last year, I think there were at least 3 news releases where nobody noticed that the word length was misspelled in the header to the tables. I mean, does nobody at this company care and proofread anything? Yeah, the stock's sinking because the market is losing competence in the attitude and professionalism of Brunswick Exploration towards its shareholder. And that is a shame because they have a lot going on for it. And this stock's going to drag down my favorites index and probably will be demoted to a bottom fish status by the end of this year.
Any new developments with Arizona Gold and its Philadelphia project in Arizona?
On June 5th, Arizona Gold got news from the BLM that it had issued a record of decision with regard to a FONSI, a finding of no significant impact, for a 2-pad drill program that they had submitted, a long time ago. And this is on the BLM land to the east of the patented claims that cover the Philadelphia vein, part of which was historically mined at a small scale. They have been drilling from these patented claims because all these permitting rules do not apply to privately owned ground. But the problem with that is because of the fairly steep nature of the Philadelphia vein, they can only test it so far down dip before they're basically drilling almost parallel to the vein. They need to step onto the BLM ground and start fanning holes at a better angle so as to intersect the down dip extent of the Philadelphia vein. So they've been only able to test it to about 200 to 300 meters down dip. As I mentioned a couple of weeks ago, they have wrapped up their program, their 22-hole program RC program that they did, and are now expecting assays to start arriving so by mid-July or so. And they're pretty pleased with what they intersected on the Resaca claims. But the big thing with these 2 platforms is that were the drill pads for which they now have a permit on the BLM ground, they will be able to fan 20 holes at various angles and directions from each of these paths. So this is a 40-hole program, and of course they're not funded for that. They're going to have to raise more money to do that. But they will be able to test 2 targets, One is the potential high stakes Red Hill bulk tonnage system. In earlier drilling, they noticed that in the hanging wall of the vein, there was elevated gold grades sort of in the 1 to 1.5 gram per ton. If that ends up being consistent within this system, they might have a multi-million ounce open pitable bulk tonnage target on their hands. But the other thing is they can now start finding where in this epithermal system does the gold grade finally peter out? How deep will it go? Because the other scenario is that this is going to be a medium to high grade underground gold silver mine. So the stock moved up a little bit, but have gone back into a pretty bad bear market. The mood I'm picking up everywhere, this is now a continuation of the sour mood in the second half of last year, which continued right into late February, and where when people started to notice gold had started to go up. But now the people are dissatisfied that gold bounces around between $2,300 and $2,400. When gold drops $20-30 a day, you can see it in the junior prices. The market just sags, but it's not really responding to when it pops up $28, such as today. So the market's really starting to resign itself to, at a minimum, that we are in the summer doldrums, and that unless you have spectacular news, your stock's going to go down on your news. And while you were waiting for results or permits or that, people are going to take their money off the table and just put it away because interest rates are still high. They did not lower them. They expect to lower them with only one time by the end of this year, which means that you're far better off having your money in some 5% treasury type short-term treasury bond than being at risk owning a high-risk exploration junior, especially a Canadian junior, which is not really supported by the Canadian government or the Canadian financial establishment. It's a sad situation. We're stuck now just buying juniors that have a potential high-impact drill program underway this summer and hope that that particular company can buck the general malaise that's afflicting the resource junior sector.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.